Hey, what's up guys? It's Ezekiel here. So, let me hit you with this. Most traders, they don't lose because they cannot read the charts. No, right? They lose because they keep trading what looks good but not real. Right? You see, the fair value gap, it can look clean, right? It can look obvious. They could be like picture perfect setups. But that's the trap. You know, most of them, they are actually noise, right? They are like the illusions that the market leaves behind to bait all the retail traders, right? The truth is that only a handful of fair value gaps actually matter, right? The ones that the institutions, they truly defend it, right? Where the real money actually flows, where price react with precision, right? So today I'm going to break down 4 powerful strategies to help you spot those high value, fair value gaps that is hidden in all the chaos that you're going to see in your charts itself, right? So that you can actually trade, right, where the big money actually moves, right? Not where like the crowd they get trapped at, right? So once you learn how to read them right, you're going to stop guessing, right? And start seeing the charts the way that the institutions actually do, right? So stick with me on this one, because when you can spot the gaps that actually matter, the market will finally start telling you the truth. Okay, so first thing first, right? Fair value gaps, right? They are formed when price, they move so fast. One side of the market doesn't even get a chance to react, right? So that sudden movement, it leaves a visible, like a space between the candles itself. So this is what traders, they call an imbalance, right? Or simply put, right? It's a spot where the liquidity at the area was kind of skipped, right? Because most of the time, price actually returns to those zones later on. So fueling the gap, right, before continuing in the same direction, right? So when you learn how to read these gaps, right, it's going to help you to review who is like really in control of the market as of this moment itself, right? So this is where the first strategy would come in. Strategy number 1, precision gap strategy. Okay, here's how it goes, right? A real fair value gap, it follows a very specific formation, right? This is a 3-candle pattern. The first candle, it sets the move, right? The second candle, it pushes hard in one direction, right? And the third, it fails to overlap the first candle, right? So that missing overlap is the gap, right? This is like a mark of like a sudden displacement in the market itself. All right, so now that gap can be bullish, can be bearish, right? A bullish fair value gap can be known as a BISI. It's like a buy side imbalance, all right? And it's a sell side inefficiency. All right, so this tells us that the buyers, they dominated the move at that point in time. So on the other hand, right, when market shoots downward, this forms a bearish gap, right, known as the SIBI, right? So this signals what? Strong selling pressure at that moment in time. All right, so now here's what happens next. Think of the gaps like magnet, right? So generally speaking, the market, it doesn't like unfinished business. So it often retraces back to fill that gap, right? So it could retrace either partially or even completely, right, before resuming the trend itself. So that's why marking them properly, it truly matters. So this is where the 3 levels of fair value gap comes in. All right. This is the key to reading intent inside the imbalance itself. So the first level, here we go. The first level, it's called the IOFED, which means the institutional order flow entry drill, right? So this is when price, it barely touches the fair value gap, right? And then it rockets right away, right? So this happens when the momentum is like so strong, right? And the institutional are aggressively controlling the price and pushing the price upwards itself. The second level, it's called consequent encroachment, or CE. So this is the middle point of the gap itself. This is like the sweet spot, right? That price often reacts at, right? So this shows that what? The market is feeling just enough, right? Just enough, right? Imbalance before continuing the direction, okay? And now the third level, right? It's the full FVG, fair value gap fill, right? This is where price returns completely to the zone itself. Sometimes it respects it, right? And bounces off with precision. Other times, it just breaks straight through it, right? And this signals what? That the move has been exhausted. So the key here, once you understand these three levels, is not to guess, right? Oh, is it going to be level 1, level 2, level 3? No. The key here is to what? Is to observe which behavior that the market is showing, right? Whether it's partial fills with rejection could mean continuation, while a full fill with break, right? It tells you that, hey, the reversal could be coming itself. All right, so now, precision is not about, oh, I need to find more gaps. No. It's about reading the intent behind it. Now, most traders lose not because they can't spot the fair value gaps, but because they trade the wrong ones, right? So this is where strategy number 2, the power zone strategy, would come in. Hey guys, Ezekiel Chiu here. So, scaling through a funded account can be frustrating. I know there are long evaluations, there are delayed payouts, and rules that is designed to hold traders back. This is a common struggle in prop trading, right? And that's why funded trader markets has been getting pretty much attention. You know why? It's because they introduce a fresh approach to design to give traders more control and flexibility. So one of the biggest highlights is their on-demand payouts. Yeah, so traders are receiving payouts in average of just 2 hours after hitting their targets, right? And if payouts isn't processed within 24 hours, they double it. This is a bold move that I've already set them apart, right? And then there is also 100% profit split. So it means what? Traders can keep everything they make. So there's no hidden fees, there's no commissions. It's just full control of profits. I mean, it's pretty good, right? So flexibility is built into the system as well. Low spreads, 1:100 leverage, swap-free accounts, right? And access to multiple platforms like what? MT5, CTrader, MatchTrader, and TradeLocker. So, and for you who are trading crypto, the markets are open 24/7, even on weekends. So with round-the-clock chat support available as well. I mean, that's cool, isn't it? So, I mean, despite all of these features, funded trader markets, they remain one of the most affordable funded programs out there today. So, for all of you traders who are aiming to scale faster, access payout quicker, this platform is worth exploring, right? Check out Funded Trader Markets, link is below. Every chart is filled with fair value gaps, right? Like I told you. But the institutions, they only respect the untested ones, right? And this is what we call an unmitigated fair value gap. It means what? That price has not returned to that zone yet. So this is like fresh, right? It's fresh. The zone is untapped yet, right? So once the zone has been tapped or tested, the edge of that zone, it weakens like big time. So start by filtering every fair value gap that has been mitigated. You only want untouched zones, the ones that the institutions are still looking at next. Add confluence, a fair value gap that aligns with support or resistance instantly. It carries more weight than any typical fair value gap, right? So when price leaves behind a gap, right, and it creates like a base support in the same level, right? This signals what? Very strong intention at that area. So this means that the institutional orders would likely sit at that pocket itself waiting for the market to revisit that level. Here's the thing, even among all the valid fair value gaps, right, there is still a hierarchy behind it. Alright, some zones have higher priority based on their position in the move itself. Okay, so now, for a bullish setup, the lowest gap at the bottom is always the strongest. This is the foundation when the move began, right? So this is often loaded with a lot of unfilled buy orders at that area itself, right? So now, on the other hand, in a bearish setup, when the market is going down, the highest gap at the top carries the most influence, right? So the deeper you go into the move, right, the weaker the zone becomes, right? So now, by ranking your fair value gap from the strongest to the weakest, you're going to like filter away all this noise, all this clutter. To see this hierarchy clearly, what you can add is the gun box tool on TradingView itself. Alright, so now, in TradingView, there's this tool, right, called the gun box. Okay, so what you can do, this is optional. What you can do is you set the level to 0, 0.5, and 1. So this represents what? The low, the midpoint, and the high of the move, right? So if you're going to go long, right, you draw it from the swing low to the swing high. And then for short, you draw it from the swing high to the swing low. So once the box is placed, this is where you can ignore any fair value gap that form in the upper half of the structure, assuming you are going long. All right, so you focus only on those that is within the lower portion. So those are your institutional zones. Alright, so these areas represent premium discount level, where the big money enters the market. Okay, cool. Alright, so now, it's not, like I said, it's not about catching every reaction. It's about you focusing on where the strongest intent exists. This is where the increased probability would come in. Alright? Alright? Because everybody's gonna say, oh, this is a fair value gap. Oh, it means what? I need to enter? No. There's so many fair value gaps out there. Get it? Alright, so now, precision trading is, like I said, it's not about catching every setup itself. It's about waiting for the moment when the imbalance meets perfection. And the perfect moment often sits where two powerful forces, they kind of like meet together. The fair value gap and the Fibonacci golden zone. When it comes together, this leads us to strategy number 3. The Fibonacci Fusion strategy. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. Alright, so now, when you combine the fair value gap with the Fibonacci retracement tool, you're stacking what? You're stacking logic on top of logic, right? This increases the probability a whole lot more. Alright, so here's what we do. We start by what? We start by identifying all the fair value gaps within the move itself. But here's the thing, we are not rushing to enter on any one of them, right? We mark them so that we can see all the structure. Once these zones are placed, here's what you can add. Put the Fibonacci retracement tool inside, right? You drag from the swing low to the swing high if it's an upwards movement, or if it's downwards movement, you drag from the swing high to the swing low. Okay? So what you're looking for is not just like an overlap. We are looking for harmony, right? So the magic happens, I mean, Fibonacci has different zones, right? The 50, the 61.8%, right? The 61.8% is kind of like the sweet spot along with the 50, right? This is like the golden zone, right? This is where the institutional orders, they often cluster, right? So this is the level where traders hesitate kind of a lot at, right? So when the fair value gap, it forms near the retracement, right? This like the market highlighting the exact zone where the big money, they probably plan to reload at the area itself. Right, so from here, we are only going to focus on the fair value gap that is closest to the 61.8% level. So we wait for what? We wait for price to retrace to that area, tap into that gap itself. Alright, but here's the thing, we still don't blindly enter. We want to watch how the candle it behave at that level itself. Right? If let's say if it closes within the area or it closes above the gap for a bullish setup. Get it? This confirms, when that happens, it confirms respect. This can be your green light itself. Okay? So then what you can do is to place your stop just below the level, which is what we call an invalidation point. Alright? And then we can aim for your take profit at the next rejection level above. Alright? So this precision, right, it gives you like a super sniper entry, right, with a small risk, right, and big reward. Get it? So when the imbalance it meets the golden ratio, it no longer become a guess, right? This is like geometry meeting momentum of the market itself, which is the fair value gap. Okay, cool. Now, if you want to learn all about Fibonacci, check out my Fibonacci video itself. Alright, so now, one time frame, it can give you signals. But do you know that when multiple time frame comes together, it gives you conviction? Okay, now, so to trade the fair value gap with confidence, you align the big picture with the entry picture. So you want to look at a higher time frame or the structure first, right? The timing would be second. So this is where strategy number 4 would come in. The multi-time frame strategy. Okay, so first off, we got to start with the higher time frame. Right? We start with higher time frame and I'm gonna add the 200 EMA, exponential moving average. So the higher time frame can be what? It can be, say, the 4-hour or above. Right? This is where we're gonna define the direction of the market itself. Alright? So for example, let's say if price is below the 200 EMA, I'm going to look for what? I'm going to look for bearish fair value gaps. Right? So now on the other hand, if it's above, then I'm going to look for bullish fair value gaps. Here's what you got to do, right? We mark the higher time frame fair value gap that sits inside the trend. Now that you've marked the gap, right, we need confirmation. Alright, so here's what we're going to do, right? We drop to the lower time frame, right? But we still got the box, right? We still got the higher time frame gap over there that we have marked, right? So when we drop to a low time frame, the low time frame can be what, right? It can be the 15 minute, it can be the 1 hour, for example, right? So then we wait for price to return to that higher time frame fair value gap. Alright, so here's what we're going to look for. We are now looking for new, smaller fair value gaps that forms in the same direction as our higher time frame. Alright, so this creates like a nested, like a compound setup itself. This is like a big money zone. Alright, so which is like higher time frame zone that matches the lower time frame zone with a lower time frame fair value gap itself. Right, so we add momentum Q. We can add the MACD. So for example, we are looking to sell, right? We wait for the MACD as an add-on to cross down, right? To have the crossover in the lower time frame, right? As price, it taps into the lower time frame fair value gap. All right. So this shows what? This shows that the sellers are taking control now. Hey, this is really, really precise itself. All right. So for entry, here's what you're going to do. All right. You can set your stop loss just beyond the fair value gap of the higher time frame. All right. And then you aim for your take profit at the rejection zone of the higher time frame itself, creating a massive risk to reward ratio. Good. Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below, and I'll see you inside the training.